Welcome to training video linking the financial statements to the audit work papers. The theme for this video will be the iceberg. In addition to being cool looking, yes, pun intended, it is symbolic of what we do. Our report on the financial statements and the report we issue are the tip of the iceberg. Our documentation of what we did to allow us to issue our opinion on the financial statements are the submerged part of the iceberg. Back in 2002, when GASB 34 came out, the way governmental reports were organized and reported on changed very significantly. During the many training sessions in preparation for the implementation of GASB 34, the statement was often made, remember, we are trying to get the boat out of the harbor, meaning it doesn't have to be perfect before we launch. We can and will make the course corrections as we go. So when I say we are getting the boat out of the harbor, that is the context. Also, the get the boat out of the harbor statement applies to this video. If it seems unpolished, etc., I wanted to get it out in your hands so that we can begin to make revisions. Hopefully, a version which is more polished will be issued after we have made some revisions in the suggestions I am making. The only constant in life is change. This is according to Google, and they give some guy, a Greek gentleman whose name I cannot pronounce, credit for that statement. But this is very true in our profession. If you do not like change or do not want to deal with it, that may be understandable and reasonable, but it is here to stay. So, again, we perform audits of the financial statements and issue an opinion thereon. That's the tip of the iceberg. We are required to obtain sufficient appropriate audit evidence on which we base our opinion. We are required to document our work sufficient to provide evidence of the basis for our conclusions or opinion, and that documentation is the submerged part of the iceberg. We're also required to have evidence that our audit was planned and performed in accordance with generally accepted auditing standards. Again, the submerged part of the iceberg. Before we go any further, let's review some basic logic that will be helpful as we do so. Logically, if A is equal to B and B is equal to C, then A is equal to C. It is also true that if A is equal to B and B is not equal to C, then A is not equal to C. Now, in order to show that we have sufficient appropriate audit evidence, we need to verify that the financial statements we are auditing tie to the underlying trial balance provided by the client. We do this by inputting the client's TB into caseware, then coding it to the appropriate lead sheets, which should match the financial statements. We verify that the lead sheets tie to the documentation of our audit work as well. In the following slides, I will present one of the ways to accomplish these tasks. I'm sure there are other ways. Our goal should be to all follow the same process. This will increase the speed of both fieldwork and the review process. The concepts we are going over to apply, to all lead sheets, not just inventory, which is just as being used as an example today. Now, going back to the logic we talked about a little bit earlier, assume that A is the financial statements, B is the lead sheets, which are the client's trial balance, and C is our audit documentation. So if A is equal to B and B is equal to C, then we can conclude that we have sufficient audit evidence. But, if the chain is broken, we cannot conclude that we have sufficient audit evidence. As a reviewer, when I'm reviewing the financial statements, first I will look to, to see that the amounts on the financial statements agrees with the amount we have on the lead sheet. For example, here we have a financial statement where the inventory with the arrow by it is $252,000, and we come over to the right side, and there we have our lead sheet, which the total of the lead sheet matches. Therefore, we've made that first connection that we are required to. We have now tied the financial statement to the client's trial balance. Second, I will look to see that we have audited the amounts on the lead sheet. In the example lead sheet above, I would expect to see our audit work tied to either A, the total of for the lead sheet, or B, a combination of material amounts, or C, individual lines on the lead sheet. Following this format allows the reviewer to quickly determine whether we have audited enough of the balance on the lead sheet to base our opinion on our work. Here are some examples of each of the scenarios I described, and I'm using a tolerable statement of 100,000, ISI of 30,000, and then trivial of 5 as we go forward. Here's example A, which is tying out the entire lead sheet to one work paper or set of procedures. And here you can see that the lead sheet total is again 252,000. You come over to the spreadsheet on the right, which is our supporting documentation, and the audit work that we do, we are auditing the full $252,000. And they match and so on. Now, the second example B, tying out a combination of material amounts on the lead sheet. Now, if you look on the left, the lead sheet ties to 2 of the amounts, but not to the rest of it. Both of these 2 amounts, the 200,000 and 35,000-ish, both tie to the same work paper. So they're being tied out with one work paper, one set of procedures, all applied to those 2 balances combined. And in the right, you can see that that's exactly what we've done. We're showing that the 2 accounts individually add up to the total amount which we audited in this case. Okay. Also, in this case, the 3 of the 4 remaining lines on the lead sheet are, even when combined, are less than trivial. Okay. The other item, and as such, we can just basically write them off as immaterial and make a note of that and we're done. But the other item may or may not need audit procedures depending on the auditor judgment and so on. Okay. The third example is tying 2 individual lines on the lead sheet. Now, in this example, if you look, there are 2 separate work paper references. Okay. This would be because the inventories are handled in different ways. Maybe one's specific identification and the other is just kind of a running total of some material being used in the process. Okay. But either way, the procedures that had to be applied to these accounts were different and had to be documented separately as a result. And here are two work papers examples of how we would summarize that. One, and if you look at the procedures part, if it's readable, if it's not too small for you, we've applied different procedures to these two different balances. That's why we've got to have them on different work papers and therefore tie them out separately. Okay. The third thing that I look at as a reviewer is to see that we have documented sufficient audit work for the relevant assertions, which we have identified as audit risks. Now, I am not going to take the time today to go through this particular part of the issue. The audit work needed for the corresponding audit areas will be addressed in other training videos. It's kind of very specific. Each area has to be handled its own way. So we're done for today. If you have any questions, feel free to contact me. And I appreciate your time today. Thank you.